Hi, I'm John Prasinos, Editorial Director of Investing Daily. Welcome to my video presentation for Monday, July 18. We've been bombarded with crucial economic data lately regarding inflation and retail sales. The inflation numbers have been grim, and yet strong retail numbers have exerted a countervailing force. Amid the mixed bag of data, it seems likely that the stock market has stabilized and the table is set for a rebound. After a dismal first half of 2022, during which all sectors except energy declined, we're seeing glimmers of hope that maybe, just maybe, better days lay ahead. Take a look at the following chart. The U.S. Census Bureau reported last Friday that retail sales jumped 1% month over month in June, surpassing forecasts of an 0.9% gain. On a year-over-year basis, retail sales rose by 8.4%. The June retail numbers came in strong, despite rising inflation and fears of a recession. The American shopper has given Wall Street a shot of confidence. In the wake of the encouraging retail sales data, the major U.S. stock market indices closed sharply higher Friday, snapping a 5-day losing streak. See the following table. The major averages still lost ground for the week, as you can see, as recession talk became more prevalent and the Federal Reserve's tightening rattled investors. The betting is that the Fed will hike rates this month by 75 basis points or perhaps as much as 100 BPS. But look at Friday's performance. The end of the week rally was a welcome respite. It's increasingly apparent that the stock market is stabilizing, and we've already reached a bottom. The jump in retail sales lifted investor spirits, and it occurred despite torrid inflation. The U.S. Bureau of Labor Statistics reported last Wednesday that the Consumer Price Index, the CPI, rose 9.1% over the last 12 months. The following chart from the Federal Reserve provides greater historical perspective on inflation. Take a look. The long-term average inflation rate in the U.S. is around 3.2%, although consumers had grown accustomed to much milder annual price increases, averaging only 1.75% from 2010 to 2019. On Thursday, the BLS released the Producer Price Index, the PPI, for June. The PPI, a gauge of the prices paid to producers of goods and services, increased 1.1% last month. The PPI increased 11.3% year over year. However, as this chart shows, the core PPI, excluding food and energy, is softening. A big question is, are we heading for an inevitable recession? The combination of a robust jobs market and resilient retail sales suggests that we might dodge the recessionary bullet. Take a look at this chart. Since the end of World War II, recessions in the United States have varied in length and severity. Even if we do find ourselves in a recession, I think it's likely to be relatively quick and shallow. Second quarter earnings season continues this week. It's been a mixed bag so far. Keep an eye on the following economic reports scheduled for release this week. The most crucial number will be jobless claims released on Thursday. Frankly, hiring trends have not been consistent with recessions. We also face a slew of data regarding the housing sector, a bellwether for the overall economy. Housing sector reports are leading indicators, and as such, they get close scrutiny from investors. Inflation is a very real problem, but the topic is obfuscated by political partisanship. The Democrats are downplaying inflation. The Republicans are exaggerating it. With the midterms approaching, don't expect clarity from Washington, D.C. I think the truth about inflation lays somewhere in the middle. Yes, inflation is hot, but commodity prices have been on a downward slope and supply chain bottlenecks are easing, which suggests that we'll soon get a handle on inflation. The Federal Reserve has been front-loading interest rate hikes, which suggests that the U.S. Central Bank will have leeway to get dovish again when the CPI and PPI subside. In the meantime, corporate earnings are healthy enough to provide a floor underneath stocks. For Q2 2022, the blended earnings growth rate for the S&P 500 is 4.2%, according to research firm FactSet. Earnings growth has decelerated, but it hasn't collapsed either. Are you looking for a growth sector that's poised to take off despite the risks that I've just described? Consider marijuana. That's right, cannabis. The pot industry is soaring around the world and it's making investors rich. Want to know more about opportunities in cannabis investing? Read my new book, The Wide World of Weed and Psychedelics. To order your free copy, click the URL at the bottom of the article that accompanies this video on the Investing Daily website. Well, that's it for now. Thanks for watching. If you have any questions or comments, you can reach me at mailbag@investingdaily.com.